Here's a summary of Citigroup Incorporated's 2025 Q3 earnings call, designed for easy reading and conveying key information. Citigroup Incorporated 2025 Q3 earnings call summary. Good morning, everyone. Today, we'll review Citigroup's strong performance in the third quarter of 2025. We're joined by CEO Jane Fraser and CFO Mark Mason. Financial highlights. Citigroup delivered a robust quarter with net income of $3.8 billion and earnings per share, EPS, of $1.86, resulting in a return on tangible common equity, ROTCE, of 8%. Importantly, excluding the goodwill impairment from the Banamex transaction, adjusted figures show a more favorable picture. Adjusted EPS of $2.24 and an adjusted ROTCE of 9.7%. Total revenues saw a significant increase of 9% year-over-year, with every business segment reporting record third-quarter revenue and improved returns. The firm continues to achieve positive operating leverage, a testament to the fundamental changes implemented in recent years. Key financial metrics: firm-wide net income, $3.8 billion, GAAP/$4.5 billion, adjusted, excluding Banamex goodwill impairment, EPS, $1.86, GAAP/$2.24, adjusted, ROTCE, 8%, GAAP/9.7%, adjusted, revenues, $22.1 billion, up 9% year-over-year. Management's outlook and forecasts. Looking ahead, management is optimistic about continued progress. Future expense reduction. There's a clear path for expenses to move directionally lower in 2026, driven by potential reductions in severance, transformation spend, and stranded costs. The firm still aims to exit 2026 with an efficiency ratio below 60%. Net interest income. NII. Continued growth in NII is expected as we move into 2026. This growth is anticipated to be supported by asset repricing and balance sheet expansion, although headwinds from interest rate movements will be a factor. ROTCE target. Citigroup is targeting an ROTCE of 10% to 11% for 2026, underscoring the focus on improving returns across the franchise. Banamex transaction update. The 25% stake sale in Banamex is viewed as a significant step towards deconsolidation and eventual full exit. Management firmly believes that this transaction, followed by an IPO, will maximize shareholder value with a high degree of certainty. The deconsolidation itself will trigger a CTA flowing through the P&L, which is expected to be capital neutral. The ultimate capital benefit will be determined by the capital release from RWA reduction and the final valuation of Banamex. Digital assets and stablecoins. Citigroup sees tokenized deposits as a key area for delivering what institutional clients need. The firm has made significant investments in digital asset innovation, focusing on client demand for real-time money movement with minimal friction and low cost. Risk and compliance. Consent order. Significant progress has been made in addressing the consent order. Over two-thirds of the firm's programs are now at or near their target state, with risk and compliance efforts largely embedded into day-to-day operations, BU. The focus is now on sustainability and the back end of control working. Significant risk factors. While not explicitly detailed as risk factors in the provided text, the following points highlight areas of focus and potential challenges. Goodwill impairment. The Banamex transaction incurred a goodwill impairment, impacting reported net income. Interest rate sensitivity. While the firm has been working to reduce its sensitivity, a 100 basis point decline in interest rates across all currencies could still impact NII by approximately $1 billion, with about $400 million in US dollars. Management is actively managing this. Regulatory environment. The ongoing efforts related to the consent order and regulatory data underscore the importance of robust compliance and risk management in a dynamic regulatory landscape. Lowlights: Banamex goodwill impairment. The reported net income was impacted by a goodwill impairment charge related to the Banamex transaction. Most important statements from leadership: Jane Fraser, CEO. This morning, we reported another very good quarter with net income of $3.8 billion and earnings per share of $1.86, with a ROTCE of 8%. Revenues were up 9%, and every business had record third-quarter revenue and improved returns. We continue to generate positive operating leverage for the firm and in each of our 5 businesses. The consistently strong results that we've been delivering are a consequence of how we have fundamentally changed the bank in recent years. We firmly believe that this transaction and the subsequent IPO are going to both maximize value for our shareholders and critically have a high degree of certainty around it. Referring to Banamex. Mark Mason, CFO. On an adjusted basis, excluding the impact of a notable item consisting of the goodwill impairment that Jane mentioned earlier, we reported net income of $4.5 billion, EPS of $2.24, and a ROTCE of 9.7%. I do feel good about the progress we've made, and as you refer, over 2/3 of our programs are at or mostly at Citigroup Incorporated's target state. Some of the biggest bodies of work are now embedded just into how we run the bank and operate it on a BU basis. Referring to consent order progress, I do expect to see continued growth in NI as we go into 2026 at this point. We're targeting a ROTCE of 10% to 11% next year. It's important that we continue to show progress in our returns across the franchise. In conclusion, Citigroup had a strong third quarter in 2025, marked by solid revenue growth, improved returns, and significant progress on its strategic transformation initiatives. The company remains focused on enhancing shareholder value, particularly through the Banamex divestiture, and is well positioned for continued success in future quarters.